TeraWulf stock is getting absolutely hammered today. But here's what caught my attention. The company has gone from primarily being known as a Bitcoin miner to signing massive deals with the hottest names in artificial intelligence. We're talking about companies like Anthropic, FluidStack, Google, and one of TeraWulf's newest agreements alone is going to bring in $19 billion. So today I actually want to figure out what TeraWulf is, why this company has become suddenly a AI infrastructure play, why the stock is selling off today, and I'm also going to pull up the chart and I'm going to show you guys a very important bit on the chart that I think every investor or somebody who is looking to invest should pay attention to. First, let's understand what TeraWulf is. They trade under the ticker WULF, and this isn't a company that IPO'd 6 months ago to capitalize on this AI hype. The current TeraWulf we know IPO'd back in 2021, and when TeraWulf initially started trading, AI wasn't the story. Bitcoin was. TeraWulf at the time described themselves as a Bitcoin mining company focused on operating environmentally cleaner facilities. But something happened over the next few years that changed the entire landscape and opportunities for a company like TeraWulf. Artificial intelligence exploded, and suddenly the most valuable thing TeraWulf had wasn't actually the Bitcoin mining. It was something much harder to obtain: power. Think about what companies like OpenAI, Meta, Anthropic, Microsoft are trying to build. AI requires an unbelievable amount of computing power. That means GPUs, servers, cooling systems, buildings, and ultimately electricity. You can have $1 billion worth of GPUs, but if you don't have anywhere to put them or enough electricity to run them, they're basically useless. And getting 100 megawatts of electricity to the power grid doesn't just happen overnight. This is where companies like TeraWulf actually become a little interesting. Bitcoin miners have spent the last few years looking for locations that can bring in a lot of electricity and building infrastructure capable of managing huge computing loads. So instead of only asking how much Bitcoin can we mine, TeraWulf could start to ask, what if we lease this infrastructure to other AI companies? And that's where this investment thesis gets interesting. One of the biggest pieces to the story is TeraWulf's Lake Mariner facility in New York. TeraWulf has already secured a HPC, which is a high performance computing lease, and one of its customers is FluidStack. FluidStack provides AI cloud infrastructure, and TeraWulf disclosed about 380 megawatts of IT computing capacity. But it gets even better. Google is involved. Google agreed to provide credit support for the obligations related to the FluidStack leases, and in exchange for the support, TeraWulf issued Google some warrants. So when people say TeraWulf has a deal with Google, we have to be very precise. Google isn't simply renting all of these data centers from TeraWulf, but Google is financially connected to the FluidStack agreements. And obviously having a company of Google's stature being able to support you for your credit means that you always have a big reliable source to always lean on in times of distress. And then about a month ago, TeraWulf signed a 20-year agreement with Anthropic that is going to generate nearly $19 billion of revenue. This agreement is for TeraWulf's Justified data campus in Kentucky. And that campus is expected to carry around 401 megawatts of IT capacity. And initial capacity should come online in the second half of 2027. And this is probably the most important part of the TeraWulf story. If you're simply looking at TeraWulf as a Bitcoin mining stock, you might be looking at the wrong company. The transformation is already appearing in the numbers. In the second quarter, TeraWulf reported $44.8 million in the quarter, and approximately $32 million of it came from the HPC lease in New York. And so that's roughly about 71% of total revenue. So this isn't something like the company is telling you that this is going to become an AI play. It's already becoming a massive AI infrastructure play. And so now the difficult part about this business is the market makers do not know how to value this company, which is why it's become so volatile and which is why it's seeing such sharp swings. And because of that uncertainty of not knowing what it wants to simply focus in on, it is causing problems with the stock in the short term. one of the bigger concerns for TeraWulf is that it requires a lot of capital for the infrastructure. This isn't like something you hire 20 software engineers to make an app. We're talking about constructing enormous amounts of data centers, electrical infrastructure, cooling systems, and everything else required to support AI computing. And so although the revenues look promising, the amount of capital required to run this business, it is still operating at a loss. And so sometimes you got to understand that the capital costs at the beginning are going to be a lot higher than later on. So these aren't necessarily reoccurring capital losses. I think there's going to be a significant amount of capital being used initially to set up all the infrastructures. And then I think it will start to taper down as time goes on. All right, so now we're looking at TeraWulf here on the weekly time frame. And so we're not really going to pay too much of attention to the stock price back here. We are just mainly going to look at this 2021 December, so around here. So let's just keep this image in our mind right now. I want to add another trend line right here at the top of these runs. And then I'm going to clone this line, and I am going to put one underneath right here. So when we look at this, we seem to have trouble breaking this resistance, and we have broke it once, but we never got the back test here on the weekly. And we have also treated this bottom line as support multiple times. And so this was a great time to buy, as it seemed as though this was when there was a lot more fear, plus the pattern started to break down. And let's zoom this in now into the daily to see what we are looking at. On the daily, there's one thing massive that I want to mention, and it's this gap right here that happened in August of 2025. And so I am a trader, investor who believes that gaps do get filled, but they do not have to get filled right away. And for an example, I will show you on this exact same stock, there was a gap to fill right here back in April of 2022. This gap did not get filled until right here, which was 2024. So over 2 years it took for this stock to fill this gap. So this was kind of when you were in no man's land. When you got the confirmation here that the gap was filled, this is when the stock became interesting. And usually when the stock becomes interesting, big money tries to scare you from your position. And so that's what happened here. And then we saw a nice massive jump here. But remember that there is a gap here in August of 2025. And so if we look at just previously that it took 2 years to fill this gap, I wouldn't be surprised if it takes a little while to fill this gap. And so given that we are now a year later and we still have not filled the gap, this could still run for another year, or it could fill this gap sooner than later. And so when you look at an AI infrastructure bubble where a lot of companies are starting to fly, we're starting to get companies that have the batteries, the computing, the storage, the memory, everything is starting to go up. But all bubbles do eventually pop, and I don't know when this bubble is going to pop, but I know that this gap eventually will get filled. And so the fact that our price has now won on our daily, we never got a back test. We never once came back to test this. We did right here. This was our first back test, but you could see we struggled, and then boom, we got shot down right here. This was a massive shoot down. And so this does not look the greatest. And so let's put our SMAs in here. Okay, so now this looks even worse. So this is setting up to be a falling knife. This is setting up to be a stock that you might not want to buy in the short term. What you're looking for right now, however, is the price to come back above our 200-day SMA. If we can recover and we can regain that $17 range, we might have some support. However, when you start to see the lines crossing through, these are not healthy. So if this green line eventually crosses down this red, that's what we call the death cross. And then from there, expect even more downwards pressure. And so right now, we don't know. Right now, it does look like this is falling off a cliff. This is a very strong rejection. Our SMAs are turning. You can see our yellow has crossed through all of them. And so in the short term, I don't expect much from TeraWulf. We can see a lot of volatility, like I mentioned before. Market is still trying to figure out how to price this company. And so looking at just simply the technicals, the stock does not look like it is in the healthiest spot. If you're someone in this stock, I would say maybe wait and hold off until even buying more. And if you have yet to get into this stock, I would sit back and I would watch, because right now there is no level of certainty on this chart. And once we do get more certainty, I will be back and I'll make an update video on TeraWulf. But until then, I want to keep this very simple and short. I will see you guys in the next video.